The time has come to start the meeting for media on Q1 fiscal year 2018 earnings for Hitachi Limited. I would like to, first of all, introduce the speakers to you. Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Tomomi Kato, General Manager of the Financial Strategy Division. Yasuo Hirano, Executive General Manager, Corporate Brand and Communication Division. I would like to ask Mr. Nishiyama to start the explanation. I would like to give the explanation referring to the PowerPoint presentation. Please refer to page 5 or 1-2. This is the summary of the profit and loss statement. For 2018 first quarter, from April to June, figures are presented. The first line is revenues. 2,165.8 billion yen. That's 104% increase in revenues was recorded. Social infrastructure, as well as high functional materials, as well as construction machinery and information communication systems have increased revenues. Next is the adjusted operating income, 148.1 billion yen. That is an increase of 16.3 billion yen year on year, or increase by 12%. EBIT ratio was increased by 0.5% at 6.8%. EBIT was 180.4 billion, and this is 26%. And Hitachi Kokusai Electric, 32 billion in terms of sales of stock is also included. At the bottom is the net income attributable to Hitachi Limited stockholders, 105.2 billion yen, or increase by 30.1 billion yen year over year, or increase by 40%. In terms of operating income, increase is in the area of information telecommunication systems, social infrastructure, industrial system, as well as construction machinery making contributions. In terms of operating income, as well as EBIT and net income, are the highest ever for the first quarter. Please now refer to 1-3. I would like to talk about the factors affecting changes in revenues and adjusted operating income. Left-hand side is revenues. First of all, impact of reorganization of Hitachi Kokusai Electric, decline of 20 billion yen. Foreign exchange impact was plus 9 billion. US dollar, it was stronger yen, but for other currencies in China as well as in Europe, the yen was weaker. Therefore, as a result, it increased by 9 billion yen. And 88.2 billion in terms of business scale expansion was achieved. Right-hand side is the adjusted operating income. Hitachi Kokusai Electric reorganization impact was 2 billion negative. Foreign exchange was positive 1 billion. And other profitability improvement to the tune of 17.3 billion yen. And this made up the 148.1 billion yen adjusted operating income. Now 1-4. This is the revenues by market. At the very top, Japan, 101% increase by 1 percentage point. Outside Japan, increased by 6 percentage point. And if you look at the ratio, outside Japan is accounting for 55%. By regions, we saw growth in all the regions. China was 105%, ASEAN, India, and other areas 107%, North America 104%, and Europe 114% was achieved. Major reasons for China is construction machinery, strength, as well as buildings. and the industrial equipment as a result of Air acquisition. ASEAN Indian, Hitachi High Technologies, Hitachi Chemicals, as well as construction machinery increase in this region. In North America, Air acquisition and as a result, industrial equipment as well as railways systems grew. For Europe, as railway systems as well as construction machinery grew. 1-5 is the summary balance sheet. At the very top is total assets, 9,934.5 billion yen. Compared to the previous term, decreased by 172 billion yen. The CCC cash conversion cycle is 60.4 days. Compared to previous term, decrease by 9.3 days was achieved. Total Hitachi Limited stockholders' equity ratio is 33.8%, and debt equity ratio was 0.27 times. The lower table is the cash flows. Cash flows from operating activities 134.3 billion yen. Cash flow from investing activities is minus 103.9 billion yen. Free cash flows was 30.4 billion, which is an increase or improvement of 8.1 billion compared to the previous year.
1-6 and 1-7 is the revenues and operating income by segment. So let me talk about the increase, decrease for each segment. Information, telecommunications, and systems. Revenues up by 1% year over year. The communication network subsidiary Alaxala Network stocks were transferred. And so this is one reason the revenue declined, but the system integration in Japan increased. So that's led to 1% increase year over year. And adjusted operating income is up by 7.4 billion yen. Domestic system integration profitability improved, and IT platform and products profitability also improved. And therefore, the increase was 7.4 billion. Next, social infrastructure and industrial systems, 8% increase in revenues. This is the increase in revenues of railway system business for Europe, and the increase in revenues of industrial products business due to the acquisition of Air. So from those two positive factors, 8% increase year over year. Adjusted operating income up by 7.5 billion yen. There was a decrease in sales price in elevators, escalator business in China, but the power and energy business and the industry distribution field profitability improved. And therefore, we enjoyed the increase in adjusted operating income. Next, slide 1-7. Electronic systems and equipment. Hitachi High Technologies clinical analyzer sales increased, and the diagnostic imaging equipment in healthcare business sales increased, but there was a negative 20 billion yen impact from the deconsolidation of Hitachi Kokusai Electric, so it was down by 2%. Now, adjusted operating income increase, there was a 2 billion negative impact by the deconsolidation of Hitachi Kokusai Electric, but the revenue increased at Hitachi High Technologies in healthcare business associated with the increase in revenue. As this segment, it was 200 million yen decrease year over year. Next, construction machinery. Revenues was up by 14%. This was because of the sales increase mainly in Asia Pacific, Australia, North America, and China. Sales increased in almost all regions. As a result, with the increase in revenue, the adjusted operating income also increased by 10.7 billion yen. Next, slide 1-8. High functional materials and components. Hitachi Chemicals acquisition of Thai storage battery, and Hitachi Metals acquisition of Santoku, the rare earth metal manufacturer. And the increase of sales price linked to higher raw material costs at Hitachi Metals. This led to 9% increase in revenue year over year. Adjusted operating income was down by 3.6 billion yen. This was due to the change in the product mix at Hitachi Chemical and the effects of changes in raw material costs at Hitachi Metals. And in Hitachi Metals, capital expenditures, the increase in the depreciation from last year, from the aggressive capital expenditure we've had since last year. This led to negative 3.6 billion year over year. Next, automotive systems. Revenues, sales decreased in North America and Japan, and sales decrease of car information system. This led to 2% decline in revenues. Adjusted operating income. In addition to the decrease in revenues, we had profitability deterioration in North America. The improvement is delayed, and the development investment increased. So the adjusted operating income dropped by 5.1 billion yen year over year. Next, 1-9, Smart Life and Eco-Friendly Systems. Revenues is 87% year over year, a big decline. This is due to the change of the accounting to net basis revenue for part of procured products in Japan. In addition, in Asia and Thailand, the sales decreased in home appliances in Asia. Adjusted operating income, we had cost reduction and the structural reform. They are bearing fruit. So the income increased by 500 million yen year over year. Next, corporate items in elimination. EBIT is a big increase by 35.5 billion yen. This is due to the gains by selling Hitachi Kokusai Electric stock. Next, page 13, please. 1-10, topics. Progress of Lumada business. Towards the center, Q1 revenues is 223 billion yen, 109% on a year-over-year basis. The solution increase in the industry segment. In the information and telecommunication systems segment and the social infrastructure and industrial systems, we are seeing a big increase in finance and public and industrial solutions, big data analysis, utilization of AI and fintech, and manufacturing and quality improvement, productivity improvement, or the preventive diagnosis. All these solution core businesses are increasing. And the solution core is being applied in more areas in the industry. So we have two examples here. One is the high efficient production model smart factory category. So the example is the commencement of the collaborative creation with Amada, a company manufacturing sheet metal processing machine for optimizing value chain. In 2016, we developed this in our Omika Works and started providing this as Lumada Core Solution Core since last year. It's a utilization of high-efficiency production model. And next is the development of Solution Core maintenance and repairing service. We utilize AI to automatically propose optimal repairs for industrial machinery. We are starting this in the demonstrative testing at U.S. subsidiary Solair, aiming to develop as a solution core so that we can expand this to providing this to our customers. Next, we are strengthening IoT communication platform for the creation of new value, such as remote monitoring. Lumada and KDDI's global communication platform are being connected. So as part one of the collaborative creation, we are trying the implementation of KDDI's platform to industrial inkjet printers manufactured by Hitachi Industrial Equipment Systems. Going forward, in the social and infrastructure, remote monitoring, we will provide more services with high added value. Now, next page, 1-10, please. Global business expansion. There are two examples, two M&A deals. One is the strengthening of cloud service businesses. Hitachi Vantara announced the acquisition of Reen Cloud, a U.S. company. And this contract was signed in June, and the acquisition is scheduled to be completed by December this year. Reen Cloud is a public cloud service and migration service provider. It is a cloud service provider. AWS, Azure certification. They are certified. And big data, IoT are utilized, and machine learning are utilized in their solutions. So by integrating us with their company, we can have private as well as private cloud, hybrid cloud, and provide a broad-based cloud service going forward. And another expansion in the IT solution business in Europe, Hitachi Solutions Europe acquired Implexis GmbH, a German company, for expanding IT solution business in Europe. And this acquisition completed on July 2nd. MS Dynamics business is being reinforced. Revenues, Reen Cloud has around 5 billion yen and Implexis around 3 billion yen. So they are relatively smaller M&A deals. So the size is not large, but the cloud service and solution service, they will serve an important complementary function and will contribute in a big way in our expansion of Lumada. So Lumada and social innovation business, global front capability, delivery capability will be brushed up going forward. Next, progress of important projects. There are two items here. As I mentioned earlier, deconsolidation of Hitachi Kokusai Electric was completed. And the discussion on Horizon project with the UK government is being continued. This was announced by the UK government on June 5th that we will continue the discussion. So this is continuing.
Next is 2-1. Which is the outlook for fiscal year 2018. We will not change the previous forecast, and we will also maintain the segment information as well. Foreign exchange rate was 105 assumed, and that is for the full year, and we will maintain this, and 130 yen for the euro. These assumptions will remain, and 9.4 trillion, as well as the operating income of 750 billion, as well as a net income of 40 billion yen will be maintained. 400 billion will be maintained. With this, we'd like to complete my explanation. We would now like to proceed to the Q&A session. Please state your name and affiliation before you ask your question. Question. I have 3 questions. First of all, it is the operating income as well as net income have achieved record highs. So please evaluate this performance once again. The second question is regarding segments. It seems that information telecommunication systems profit has grown dramatically. what is the impact of Lumada on this? Please elaborate on the positioning thereof. On the other hand, regarding automotive systems, it seems that profitability is struggling within the Hitachi group. How will you position the automotive systems going forward? Third point is regarding the outlook for the full year. It has remained unchanged. The trade friction with the United States, as well as long-term interest rates rising, these are macroeconomic factors that are changing. How do you evaluate the situation today? What are risk factors that should be considered? Answer. Regarding the result of the first quarter and the evaluation thereof, in terms of products, automotive systems, as well as Hitachi Metals, Hitachi Chemicals, for these products businesses, raw material cost is increasing, and cost reduction measures are underway, and price passing on the cost is lagging. However, in terms of the social innovation system, the core businesses such as information telecommunication, as well as social infrastructure industrial system, and are growing. Year on year, mostly it is growing. Therefore, it is positioned well. These businesses are positioned well. Therefore, we will maintain this foundation. And in the second quarter and onward, for information telecommunication system, social infrastructure industrial system, profitability improvement will continue. For these two areas, from the past, we have been conducting structural reforms, and results have been brought to bear. Project management have been thoroughly implemented, which is now fully embedded. These are the core businesses in terms of social innovation. Therefore, we will continue to improve the profitability of these businesses. Now, I would like to talk about the impact of Lumada. The sales or revenues is not very significant yet, but it is continuing to grow in a steadfast manner. In terms of profitability, scale is still limited. Incubation and platform improvement, as well as development investment will be required. But in terms of average profitability, is better than the normal SI business. Therefore, going forward, we will continue to expand on this trajectory. POC are being implemented actively. In terms of the automotive system, on the other hand, the positioning within the group will be explained. Productivity, as well as North America sales decline, meant that in the first quarter, the situation was difficult. There was deterioration in terms of revenues and income compared to the previous year. But electrification parts and systems, as well as autonomous driving systems, will be our major focus going forward for further growth to be achieved. In terms of the outlook for the whole year, as well as the overall environment of our business, will now be explained. The tariff, additional tariff, is a concern, and the friction between the United States and China, as well as South Korea, are concerns from China to U.S. exports, and U.S. to China exports, as well as in the U.S. The procurement of parts as well as materials from China have not been significantly impacted yet directly. That is not the case. There are some items that will come into the scope. But, for example, for what is being produced in China, the production site could be changed to another Asian country. Or, on the other hand, for the U.S., the parts, materials that are procured from China could be replaced by others. Therefore, the direct impact is limited. However, economic impact will be felt because it is not just about the U.S. economy as well as the Chinese economy. Through the supply chain, there is likely to be a worldwide impact that should be fully considered as well. Therefore, we will watch very carefully what will prevail going forward.
Any other questions? Question. I have 3 questions. First is in the information telecommunication segment, the operating income margin is up by 1.6%. It's 7.9% now. So, Nishiyama-san, how do you look at this? And what is the progress towards your medium-term target? Second question. Same again in the information telecommunication systems. Revenue increased dramatically. The factors behind this is the better project management. Any other industrial segment, verticals? Which industry segments grew? And third question is on global business. 106% year-on-year. The factors that will lead to global expansion towards next year are the acquisition of Green Cloud and KDDI's IoT platform development. So which impact factors do you think will contribute to your global growth next year and onward? Answer. First, information and telecommunication systems, profit margin improvement. In addition to the project improvement, IT products, the structural reform that we've been working on for a few years now is now bearing fruit. And since last year, we've been promoting Hitachi Vantara's storage business in North America, transformation of the storage business, and the business transformation restructuring in North America. We are seeing some positive results from that too. And the achievement for the full year target in information and telecommunication systems, the first quarter progress against the full year target is better than normal years. So the first quarter progress against operating income target was 18%. Last year was 14% because some deals, projects were front-loaded. That's one reason. But we tend to be overweight on the fourth quarter, so we are trying to front-load the deals as much as possible to level off, balance the 4 quarters. So even including this front-loading, the progress is still good, favorable. So this is improving our probability of achieving our full-year targets. Now, by industry, which industry was strong in the growth in revenue in the information telecommunication systems? SI, public sector, and social. Various solutions, SI business is increasing, and we are very busy. So we are seeing growth there. And with that, our profitability is improving. The demand is strong, but we are promoting thorough project management. So I think that is the biggest reason for this revenue growth. Next, global business. It grew by 6%. As you see in the regional breakdown, we have a good balance in our growth. So slide 1-4, revenues by market. Second from the right, ratio. China 12%, Asia 12%, North America 14%, and Europe 12%. So compared to the regional growth, we are growing at a higher level. We had small presence in Europe, but it's 12% thanks to the growth in rail business, and the construction machinery demand is strong. So in all regions, we were able to grow. Going forward, in order to grow this further, we need Lumada and social innovation business and delivery resource overseas. These are the areas that we need to reinforce further. So we plan on doing that to achieve higher growth. Thank you very much.
Next question, please. Question. I also have 3 questions. First question is regarding internal plan. What is the progress made in the first quarter? I think it's positive, but please confirm. Now, what is the reason why you did not change the forecast for the full term? There are uncertainties in terms of the macroeconomic environment. What are the concerns, and what have already being realized? The second question, the 2 questions before, regarding Lumada, the average profitability is better than the regular SI business. Why is that the case? Lumada is still in the seeding stage, and I thought that its profitability is lower. But if it is still even higher now, is it going to become even higher going forward? Third question is my regular question. The overall performance is improving. And I asked you about the risk relating to the forecast, but what about others, inclusive of nuclear power plant business as well as South Africa? Please elaborate. Are there any issues? Answer. Regarding the internal plan, in terms of revenues, 30 billion, and operating income, 5 billion. Improvement has been made by segment as well as. And digital explanation is very difficult because many of our businesses is based on projects, and the revenue posting could vary, and percentage of completion basis can increase or decrease. Therefore, it is difficult to give you a clear-cut explanation. But in terms of revenues, is 30 billion, and operating income, 5 billion improvement have been made. Out of which, in terms of segment, automotive system is 3 billion deterioration against the plan. And year-on-year basis, there was decline, deteriorated. But apart from this business, for other segments, it was based at the level of plan, and in terms of the information telecommunications as well as social infrastructure industrial system as well as construction machineries have exceeded by 8 billion altogether, and total 5 billion will remain. Regarding Lumada, in terms of the profitability, Let me elaborate. There is the Lumada core, which is the creating the solution core, creating the platform. But that will be increased, multiplied by n times. Profitability must remain high. Ultimately, however, currently solution core development cost is being incurred, or incubation cost is being incurred as well. So if we exclude this, the Lumada core business profitability is exceeding 10% currently. But going forward, we will increase scale and profitability or profit margins will increase. That is our plan. Regarding risks inherent in our plan will now be explained. One is automotive system. In terms of revenues, as well as productivity, improvement will be required. We have started this last year, but there are some delays. In the first half, there are and second quarter, it is likely to continue. But on a full year basis, we hope to make a recovery in the second half. But this is a concern in terms of revenues. But beyond that, we do not assume any other risks other than the overall macroeconomic environment. I would like to watch this very carefully. And in terms of South Africa, arbitration procedures has begun, and we will follow the procedures of the arbitration. In terms of Horizon, on the other hand, with the UK government, the formal discussions have started. We cannot give you details of the discussion taking place today, but it does include financial structure as well as cost. Further evaluation in detail will be made, and economic rationale will be the basis of our decision.
Any other questions? Question. By segment, first quarter, the construction machinery profit is high. Asia, Australia, and China. What kind of demand are you seeing? And this profit margin is improving dramatically. What particularly did you do to realize this improvement? And will this improvement be bigger going forward? Answer. Construction machinery. One notable point this time is we saw growth in all regions, growth in demand in all regions, and especially Australia. Ratio-wise, Australia was 17%. So this was the highest in all regions, including Japan, the top region now in terms of the ratio. So the fact that we had strong demand in all regions is one notable factor. However, China, we did not have a sharp drop in demand in China as we worried, but going forward, the infrastructure investment in China has to be watched closely. And the profitability improvement. Last year and 2 years ago, we conducted structural reform, and the positive impact is now appearing. Going forward, maintenance and parts service like Bradken and HE Parts, the companies we acquired last year in US and Australia. So maintenance, recurring type business will be promoted. And we think this will stabilize the profitability even with the changes in the economic cycle. And if there are fluctuations in the main business, we will be able to secure profitability by doing this. So that is the structure that we are building right now. And we are seeing progress. Hitachi Limited's IoT technology will be applied to improve the product capability. And this effort is underway. So this is how we plan to improve higher profitability and mitigate volatility. Some additional comment, if I may. So 17%, this is the overseas growth. Oceania is 21%.
We will now like to take the last question. Question. Regarding the Horizon project, please give me further details on the progress made so far. Last month, the UK government has made an announcement and the development agreement was presented from Hitachi, and I understand the UK government has accepted this, received this, and it seems 2027 is the start of the operations that has been outlined. But according to your objective or goal, it seems a beginning of 2020s. So why is there a gap? Is there a delay in the project? Please elaborate. Answer. We are engaged in discussions, and therefore, for the overall process, we have to refrain from making comments. I don't think there will be cost overruns because of prolonging of the project. But rather than the specific process, we have to make a decision on the FID, which will be in 2019. So toward 2019, we are continuing our discussions. Regarding the details, it is subject to a non-disclosure agreement. Therefore, details cannot be divulged. Question, but on the part of the UK government, their comments have been made, and you also have your target schedule as well. Are you going to maintain this at the early 2020s? That answer, the actual timing will be decided based on discussions. But question, but there seems to be a gap in the schedule. There is confusion on our part. Why is that the case? Why is there a gap between the two schedules? Answer. The details of the process as well as the schedule will be decided going forward. On the part of Hitachi, we have not reviewed the schedule yet. Detailed schedules will be discussed going forward. First of all, regarding the investment. The investment financing scheme will be discussed, and cost estimate as well as valuation of cost. And after that, we will go into construction. A specific schedule will be agreed upon at that juncture. Question. The UK is saying 2027. Is this the plan or the estimate made by the UK side? Answer, yes, that is our understanding. But But we will be working out the details regarding any changes to the plan going forward. Thank you very much. With this, we would like to bring this meeting to a close. Thank you very much for your attendance today.